Hey everybody, I wanted to record this video. I wanted to get one of the lenders I work with Larry Delbridge at Guaranteed Rate Affinity. He and I have done a lot of work together, and there's been a lot of bad information out there on social media. And I wanted to talk to him and get questions answered and get some great clarification so you know exactly what's going on with the shift with the coronavirus and the pandemic. So just wanted to ask him some questions. Larry, thank you for joining me for this. I do appreciate it. You've given up some time of your day.
Yes, sir.
So let's just jump right in, if you don't mind. So
Absolutely.
we know people are still buying homes, but the whole process not the whole process, but the process has changed. People are concerned. So let's right now start with the people that are in, like, they're under contract. They're at the very beginning. They're looking. What's happening to those loans? What do they need to be concerned about, or do they need to be concerned?
You talk about someone that's just getting ready to start looking right now?
Correct. Yes.
Really, there's a lot of misinformation out there. Somebody that's got a 620 credit score and their loan amount's going to be $510,000 or less. There's virtually zero changes whatsoever. I was talking to some realtors today, and they asked me what kind of turn times. I go, well, we're backed up. It's taking 30 days now. And they go, what are you saying? 30 days. That's long for us. It hasn't changed. We've been so far ahead of this curve here. We opened up additional operation center just for refinances because we don't want it to affect our purchase business, because that's where the majority of our business is, purchase loans, and we want to look after our BNs out there that we're doing loans for, that they close on time, because it's important for our reputation. So we're doing that. So there hasn't been a whole lot of change of that. Where there have been some changes at is as the customers doing 100% financing. Like if we commonly call it a bond program or down payment assistance, those there, we have internally made overlays. A lot of people are saying the government has made changes to underwriting, and that's not good. The government has not increased credit scores or anything. A lot of companies are worried about default rate for if we're out of work for an extended period of time, that people not paying their mortgages. And if they don't pay the mortgages, we still have to pay off, the servicer still has to pay who lent us the money, because none of us have an unlimited supply of money. So if you don't pay your mortgage, your mortgage company still has to write a check to pay that interest for whom they borrowed that money for your mortgage. So they're worried about the servicers having a problem. So that's been an issue there. They're worried about that. So on the FHA loans in particular, those loans there, they've actually jumped up their credit requirements. Most lenders have gone to a 680. Some have quit doing FHA loans altogether. Here at Guaranteed Rate, we did go from a 580 to a 620. So we're still doing all those loans. So it's not an issue with us at all.
Okay, fantastic. Because I know, like, I already talked to a couple people that are worried about that. They're like, look, I don't have a 680. I'm nowhere near a 680.
Right.
I'm 6 months away from, getting my credit fixed, and it can actually stop them from buying a home. So, okay. But so 620 is really, as of today, April 9th, 620 is what they need.
Exactly. And jumbo loans, if people are putting 20% down on a purchase transaction, we're still doing the jumbo loans. There's not a whole lot of change there. There might be a few more reserve requirements and all. So as long as we're putting 20% down on jumbo. So there really has not been a lot of change with that. And VA loans and USDA loans, 2.75%, 30-year fixed, no points. Pretty darn good. And FHA is just slightly higher. So,
okay. Yeah, that's fantastic, especially for VA. So, and are you guys still waiving the VA fee?
We are still waiving all the VA fees.
Okay.
Absolutely. We love our veterans.
Okay, fantastic. Now, let me ask you another thing, because we've heard this come up, and unless you're in the industry and people haven't, this needs to be explained, because I've heard a lot of people go out there like, oh, non-QM loans are gone. Well, unless you're in the industry, you don't know what a non-QM loan is. So, and this is very important because, someone in our office actually just had a deal fall out because it was, they were self-employed. So if you can explain a little bit about what a non-QM loan is, what's going on with them right now, so people know, if I'm self-employed, what do I need to be aware of?
Non-QM loan is a little bit of a concern right now, and it's because of where money comes from. There's a lot of uncertainty in the market. And actually, until today, every investor that I knew that did non-QM loans were not funding those loans right now. And a non-QM loan is, they don't qualify for Fannie, Freddie, FHA, or VA. A good instance is we had a borrower. I've got 2 loans that I'm working through right now that I'm trying to get handled. Couples moving from Chicago. They make money. They have tax returns. They would qualify for it, but they had a $600,000 home in Chicago. They didn't qualify for that mortgage and this mortgage. Their taxes on that home was $22,000. Yeah, I've talked to them. They go, we are coming down there. Our mortgage payment is going to be less than $22,000. Mortgage payment, including tax, interest, everything's going to be less than $22,000 a year. We are coming. They're putting a large down payment, but we're doing what's called a bank statement loan. And we actually had them in a 30-year fixed 3.875% bank statement loan, and that's a non-QM loan. I got notification today that a different investor that I haven't used in the past, but I happen to know the guy. You know, when you do this 100 years, you get to know a few folks. They reached out to me and said, hey, Larry, I've got the bank statement loans are back now. So we're working on getting that one worked out for them there. So it's going to be coming back. This is a temporary thing. Don't worry about it. We also do what's called cash flow loans. So I got a doctor. I was closing a cash flow loan. Well, he was purchasing his 8th property. Like any good businessman, his accountant says, you know what? All these improvements you're doing to these properties, because he's getting great cash flow out of them, he was writing off, large, improvements off his tax return. So instead of paying taxes on $700,000, he's paying taxes on $200,000. Unfortunately, he wasn't qualifying for a mortgage. So we had him approve what's called a cash flow loan. And what that is, all we do is we have an appraisal done. And the appraisal says how much the home should rent out for. And if it says the home should rent out for $3,000 or more per month, as long as the mortgage payment is less than $3,000 a month, that's all the income verification we need for that. That is a non-QM loan. And so that's the 2 type loans that are most commonly done under non-QM. They're going to come back. It's just right now, they're not here right now. Except for that one investor, I got to get all the details of it. So they're going to be back though.
Thank you. And so let me back up a step, because people don't know, when we say non-QM, it's non-qualifying.
That's correct. Yes.
So that's what Fannie, Freddie won't buy the loan or insure the loan. So that's what we need to be aware of. Or for those of you who are self-employed or who we're not going to be in that type of loan, that's going to be a non-QM loan. Correct?
Exactly.
Fantastic.
You're good.
So let me ask you about underwriting, because we're hearing a bunch of changes, and it seems to have changed across the board. No one really knows. So what are you guys doing, and what do buyers need to be aware of as far as underwriting?
You know what? Things really have not changed that much for us. I have a great pod, and my pod is I got a group of people. Everybody has their own job. So we're still doing the same verifications. We're still doing the same credit pulls. All that stuff's going. The only thing that's going to be a little bit different is we're going to do, normally we'll do an income verification within 10 days prior to closing. Now it has to be within 3 to 2 days prior. Unfortunately, some people have been let go. So we want to call, we want to verify, is Ben still working at his job, and is he still full-time? We're going to be doing that, and it's just a little closer to closing. On an FHA loan, okay, on a self-employed borrower, we're actually going to ask for, receipts. So if the guy owns a loan care company, we're going to say, hey, you need to get us some receipts for some jobs you've just recently done, just to verify that they really do have cash flow coming in.
Okay, fantastic. I have other questions that are now popping up in my head as we're discussing.
No, bring them on. The more we can let folks know, the better they feel, the more homes they'll buy.
There you go. Exactly. And that's what, this is all about. So we want to make sure people know it's still possible to have loans, funded. You can still qualify and move forward, even in the midst of all of this, what's going on. So,
and the questions that you have are what, the people watching this video have too. So just keep asking, because the more you do, the better they'll feel.
Fantastic. Appreciate it. So let's go. Let's talk about appraisals. So this, we know there have been changes. I have heard there have been changes as far as conforming loans. They can do drive-by appraisals now, but FHA and VA still require a full appraisal. tell me what, as of today, what are the current rules and what's going on?
Well, if you heard anybody talk about there's going to be some good things that come out of the coronavirus,
Yes.
this is going to be some of the good stuff that's going to come out of here. Besides, you actually seeing my neighbors' faces. I've seen more people's faces in the last 2 weeks than I've seen in the last 2 years. They're all out walking. Their kids, their dogs. So that's a good thing. We have gotten very creative on appraisals.
Okay.
We're allowing appraisers to go to a property, walk around it, inspect it, call the seller or the person refinancing it, and do a FaceTime. So as they go through, stop, whoop, hold on, back up, let me get that kitchen here, I need that cabinet, do a screenshot. Go to the living room, whoop, let me get that fireplace. And they're actually doing pictures like that for an interior inspection. So we're finding ways to make, get these appraisals done without putting them at risk with contact with other folks. So that's happening a lot. Also, we're turning around and I lost my train of thought there for a second. Sorry.
No worries.
Somebody's distracting me.
It's all good.
Anyway, we're I forgot what I was saying.
The appraisals and changes and
yeah, anyway, they're doing that with the appraisals. A lot of people, if they're putting 20% down, they got excellent credit. We're doing property inspection waivers. So, which is pretty cool. So we're not needing appraisal at all. I mean, I'm sure we've had some transactions we didn't need appraisal, but it seems to be a little more common. And then, of course, they are allowing for drive-bys in some cases, but it's we really had, we were worried that there's going to be such a backlog of people getting appraisals done that it's going to take a lot longer. And I haven't seen really any extra time. And I got a lot of transactions going right now. So we've been lucky so far.
And I think you hit on something right there, because I think it was a big concern for all of us getting access to for the appraisal to have access to the home, for people being comfortable. We didn't know what was going to happen. And I think all of us, I know a couple of my buy contracts recently, I instantly put the appraisal and financing contingency out 25 days. We're closing in 30, but I wasn't sure how we were going to be able to get someone into the house. And now it seems, like what you're saying, it's really not a problem, and we haven't had the backlog that we were all sort of expecting. So that's good news, I think.
Yep.
Okay, fantastic. So let me ask you another question here. I know I mentioned this to you. I was talking to someone the other day. We saw someone on Facebook, and it was funny because they were when the rates dropped, they were like, "Woohoo! We're getting a 0% interest loan," and it was like, no. And the friend that I was talking to, she was like, "I didn't want to comment on their post." Yeah, I get it. Didn't want to say anything in front of everyone. So if you can talk a little bit about rates right now and what's going on, because I know we all saw that we were very low. Then we had the spike, and people were wondering what was going on. So if you could give us an update on that, that'd be fantastic.
Well, the rates are talking about dropping to what they say 0. That's the rate at which banks borrow banks from other banks overnight. Mm-hmm. Mortgages are based on mortgage-backed securities, which are based on bonds. Okay. Rates probably should be lower than what they are right now, but our federal government has stepped in and they've purchased a lot of them, trying to stabilize the market. That's going to help the non-QM stuff come back. But normally what normally happens is when the stock market is doing bad, it's been dropping the way it is, that money flows to bonds. Well, your bond traders sit here and they go, "Oh, I got a ton of people giving me money. I don't have to pay as much for bonds." So those bonds go down, down, and down. Well, the lower the bond is, the lower your mortgage rate's going to be. So when the stock market starts rallying again, people's going to stop buying bonds, and they're going to start moving over here. So your bond traders will sit here and say, "Okay, I got $1 trillion worth of loans I got to fund. Give me some more. I'll pay you a little more," and the bonds will go up and your mortgage rates will go up. So rates are still very, very low. I've closed a couple people this week at 2.5% on 15-year fixed loans. So it's free money.
Can we address that right? Because this is something that I'm having to talk to clients about. And I want to be very clear about this. Rates were already good. Okay.
Oh, yeah.
They were already good. And if you drew out a historical line of where rates fall, the median is 9%. Okay, that historically. So we were already fantastic at 4, 5, and 6%. And so if I can, it cracks me up now that sometimes people are like, oh my gosh, the rate went up to, I'm being charged 4%. I'm like, it's still fantastic. But, I want to emphasize here to people how super fantastic it could be, because right now is your chance to lock it in. This is like you said earlier, the good side to this pandemic is that going to be rates can drop if you can buy a house now, or something I want to talk to you about is refinancing as well. So where does that stand? Because now might be a great time for a lot of people to refinance to a lower rate.
Well, normally I don't recommend someone to refinance if they're just saving like a 0.25% in rate. But with the environment right now, with the uncertainty of jobs and decrease in income, I would recommend it. Now the reason is typically you're going to miss at least one, probably 2 mortgage payments. Then you're getting an escrow refund from your current escrow that really works out to almost 3 payments that you skip. And you don't have to go about a deferment from your mortgage company. You get a lower payment and all that works out. So I am recommending them doing it now with a lesser margin. On another note, with the interest rates where they are, a lot of people are choosing to 15-year rates because that way they can get a much lower rate, which is helping out also.
Fantastic. That's what I'm glad to hear, because I think people need to understand that. I love how you brought up the fact that, you have that, as that missed payment, as people call it, when you know it isn't, but it is a missed payment, is the way people view it. So there are people might be able to refinance and actually save some money as well, and sort of float a little bit longer through this process if they're not sure about their job security. So.
Exactly. And, they are, me too, I think rates might actually drop even lower. And we have and this is not new, we've been doing this forever, we offer a float down. Okay. So if I lock you in at 3.25% today, and that same rate goes to 3% or 2.75%, I can float that rate down for you to that 2.75% rate. So if rates get better, we can give you a lower rate, and which is great. A lot of companies don't offer that, and so there's no reason. If you're already saving 1/4%, 0.5% now, and it makes sense to do it at that, lock in now, and if rates get better, we'll float you down. And for the record, as a loan officer, the way the comp is, I get paid the same amount of money whether you get a 2% rate or a 20% rate. Okay, so I would love to give every customer a lower rate if possible.
And I think that's a great piece of information that you just shared. Like, your compensation's the same. And, and I tell people this too, I don't get paid for referring anyone. You can use whatever loan officer you want. You can use whatever inspector you want. And, we all have a same goal. And I think that's why you and I get along so well. It's, let's get people where they need to be. Let's get them the house that they're looking for and try to make it as easy as possible. So, I thank you for taking the time to talk to me, answer some of these questions. I think this will be great so a lot of people can see there's still options out there, that it's not as extreme as some people are saying on social media and probably talking on the phone about, but mainly on social media. It's not as drastic. There are options.
Yeah, people need to realize that things really haven't changed that much for us. We've actually been a digital company for quite a while. I don't have to be in an office. I don't have to meet face-to-face. Most of the time, the only time I see a customer face-to-face is actually at closing. We got a great online engine. They do their application there. It actually gives them their credit scores. We don't charge them anything for it. If they put enough stuff in there, it actually gives them their approval that they can print out. And then they can, from their phone, they can do the applications, and they can actually load documents from their phone to verify everything. So technology has just gone, it's so great for getting loans all done these days. And a lot of times still, someone's got it, they're putting a good down payment, they got a good credit score, they work for a large corporation, we don't need pay stubs, we don't need W-2s, we don't need appraisal, they put in their bank account information, we don't need bank statements. So literally, they need you, they need a contract and a driver's license, and we can get them closed.
And that's good, exactly, and they're good to go. And it was funny because you and I had a deal like that together, and you're like, yeah, they're fine. Their income's high enough, their credit score's fine. I was like, okay, like you're like, just get them to the closing table. It's like fantastic. So it's definitely easy. And you brought up a great point about everything being digital. I think that's one thing, and this would be a whole separate video at some point, that everyone has shifted so well to digital that if you have concerns, Larry's whole company can do everything digitally. You don't have to do anything. Everything that I do is on e-sign. It's, it doesn't have to be that. The closing attorneys have shifted as well. They've changed a lot of the rules there. So I think that's a very good point to bring up.
I would like to talk about the closings with attorneys. A lot of folks don't want to, they want to do their social distancing. I can speak. Social distancing. They don't want to be around people. And so literally, like with Weissman, our attorney, they can literally go there, sit in a room by themselves. They'll actually talk to them over the phone, have them sign all the stuff with 0 person in the room, use their own pen that no one's ever touched. They can actually do all that. They're actually working on stuff with video closings and everything. So we are figuring out ways to help people close transactions so that they are comfortable with the entire process. So people need to keep that in mind.
Definitely. And I think you hit it on the head with this. It's, if you have questions, ask, because I think the industry as a whole very quickly pivoted to accommodate the situation. And I agree with, one of the lawyers at Weissman, it cracked me up. There's a picture of him outside. He took the paperwork down to the car for someone who didn't want to come in. Everyone gets it.
Curbside closing.
Curbside closing. There you go.
Have it your way.
It was fantastic. I think it was even raining when he was out there. So, anywho, fantastic.
I want to do a kudos for my company.
Please.
As soon as this started happening, we told all our I've got a whole pod that works along the front end and back end and underwriters. We made it mandatory that they had to work either Saturday or Sunday. So for about the last 5 to 6 weeks, they choose a Saturday or Sunday that they work to make sure that we don't get behind and we stay ahead of the curve. So we're really doing everything we can to keep everybody happy and everything moving and getting your transactions closed.
Fantastic. And that's a really good point. Thank you for bringing that up, because not all companies are doing that, and some people are running into things with individual companies. So, Larry, I appreciate it. Thank you for your time.
As always, Ben, look forward to talking to you soon.
Likewise. Have a good one.
Have a good one. Bye-bye.